If you're searching for pound and USD technical analysis today or need cable support and resistance levels that actually hold, this breakdown exposes the exact zones institutions are watching. Listen, I'm staring at a trap right now on cable, and if you're watching this before the London fix, you need to hear every word. The 1 hour chart is screaming buy. Momentum's curling up, stochastics just crossed above 50, Williams %R is coming out of the basement. Retail is piling in right here, convinced this 2-month low is a bottom. They are dead wrong. This is a textbook liquidity grab, engineered to suck in early longs before the real collapse begins. There is one danger zone sitting at 1.3290 and one hidden opportunity down at 1.3022 that the herd hasn't priced yet. I'll show you both. Stay to the end because I'm handing you 3 exact levels you can trade today, with stops and targets built from the same order blocks I watch on my institutional tape. Write this number down right now, 1.3290. If cable closes a single 4-hour candle above 1.3290 today, the entire bearish structure resets and I'll flip to a range play. But until that happens, this is a fade the bounce market. My session bias is aggressively bearish, fading the intraday pop. The higher timeframes are screaming strong sell, monthly, weekly, daily, all aligned against sterling. The herd is positioned heavily long. You can see it in the commitment of traders' proxy, speculative contracts building while real money is offloading. That imbalance is fuel for a liquidation cascade. All we need is one political headline to light the fuse and 1.3156 becomes a magnet, not a floor. I'll say it again. 1.3290 is the invalidation. If price closes above that, stop reading and wait. But below it, every bounce is a short. Let's walk the charts top down because what I'm about to show you on the weekly is the sort of brick wall that separates professionals from gamblers. Pull up your weekly pound sterling to US dollar. The 200-week moving average is sitting at 1.3381, almost exactly at the 1.3375 resistance level I flagged. That average has been sloping lower for months, acting as a gravitational ceiling. The weekly trend is strong sell, the MACD is printing a deeper negative histogram, and the ADX is at 28.4, which tells you this isn't some choppy drift, it's a trending beast. Now drop to the daily. Daily trend is also strong sell. Price is pinned below every major moving average I care about, MA20 at 1.3379, MA50 and MA100 both clustered at 1.3424, and that 200-week I just mentioned. This is a lead resistance dome. The daily RSI is 34.9, not yet oversold, meaning there is still room to fall before any mechanical bounce matters. And here's what most traders miss. The MACD on the daily is still negative, printing minus 0.005, and the signal line hasn't even thought about curling. That's bearish momentum with zero exhaustion signal. Now zoom into the 4-hour, because this is where the trap is being set. You see the 4-hour. Negative divergence nobody is talking about? Price made a lower low near 1.31563 sessions ago, but look at the RSI, it's actually higher than the previous low. That's hidden bullish divergence, the kind that seduces retail into thinking a reversal is coming. In a strong downtrend, that's not a reversal signal, it's a bear flag reload. The 4-hour chart is simply building a base of weak longs that will get squeezed out. The 4-hour MACD is still underwater, minus territory, and the CCI just spiked out of the minus 200 gutter, which is why we are seeing this dead cat bounce. The 1-hour chart is the only time frame flashing by, and it's doing so with stochastics at 52 and Williams %R at minus 78, hardly an overpowering bullish confirmation. The 1-hour uptick is a mean reversion retest within a structurally bearish 5-hour, daily, weekly picture. The 60-minute MA20 is at 1.3379, while price is currently 1.3234, so don't be fooled. The moving averages are miles above us, meaning this bounce has room to run before it hits the first real selling wall. That wall is the pivot at 1.3241, then resistance 1 at 1.3290. If we break 1.3290 intraday, the next magnet is 1.3375, right at the convergence of the weekly MA200 and the daily MA20. That's the institutional short ad zone. I want you to etch these levels onto your screen. Support 1 is 1.3156, that's the immediate test zone. Below that, support 2 at 1.3107, and then the real capitulation level at 1.3022, coincidentally the monthly. S3, the place where stop losses from leveraged longs accumulate. Resistance sits at 1.3290, 1.3375, and the invalidation line at 1.3424. Anybody telling you to buy sterling here with the political backdrop we have isn't looking at the same data. I'll connect those dots in a moment, but first, here's the hidden divergence on the 4-hour that changes everything. When price starts printing these false divergences inside a strong ADX trend, it's not a call to counter trade, it's an order to wait for the fade. The daily support at 1.3156 has been tested twice. The third touch usually breaks, and when it does, the air pocket down to 1.3022 is rapid. Gold is moving tick for tick with real yields collapsing, and sterling is inversely dancing with the FTSE 100 risk flows, which are signaling risk off. The cross-linkage is screaming dollar bid. Alright, let's talk about what actually triggered this move. The 24-hour core newsfeed is littered with one phrase: political risks mount. Sterling is steadying near a 2-month low not because things are getting better, but because the market is repricing a UK political crisis. We've got whispers of a no-confidence vote, potential budget gridlock, and rising gilt yields as fiscal credibility crumbles. Yesterday's ECB speaker was a sideshow. The real story is the Bank of England now cornered between sticky inflation and a political vacuum. The pound is getting hammered because bond spreads between gilts and treasuries are blowing out in favour of the dollar. The UK 10-year yield is spiking, but not for the right reasons. It's a risk premium, not a growth premium. That's what makes cable a dollar killer setup. Policy divergence is widening, with the Fed still holding firm and the boat potentially forced into a dovish pivot if the political mess deepens. This isn't just noise. It's a structural repricing of sovereign risk. On the cross-asset board, cable is lagging euro to US dollar and pound sterling to Japanese yen is in freefall, confirming the sterling-specific panic. Risk appetite is brittle, Nasdaq futures are wobbly, and crude oil is edging lower on demand fears, all pointing to a dollar bid that will crush any cable bounce. My 1 to 2 week directional lean is firmly bearish, targeting 1.3022 as the next liquidity pocket. The event that invalidates this lean is a daily close above 1.3424, the MA50-MA100 cluster. If that happens, we are in a short squeeze melt-up and I'll pivot to playing the range. But with the current political trajectory and the fact that the daily ADX is rising, the path of least resistance is down. Here's an interaction trigger. Do you think cable breaks 1.3000 this month? Comment yes or no right now. I'm tracking consensus and I'll share the aggregated bias in tomorrow's video. Drop that comment, let's see who's aligned with the order flow. Most people skip the trade setup section. They want the flashy call but not the plan. That's exactly where the money is made, so stay locked in. We are going 3 strategies, from conservative sniper to high-risk aggressor, with exact entry numbers, stops, and risk-reward. Take screenshots because I'm about to show on-screen graphics you can copy directly onto your platform. Strategy 1, the sniper, the conservative play. This is for traders who wait for confirmation and want to sleep at night. We are fading the rally that is currently unfolding. Entry trigger, sell pound sterling to US dollar at 1.3280, but only after a 1-hour candle closes back below 1.3241, confirming rejection. That 1.3280 level sits just under resistance 1 and gives you a tight fill. Stop loss goes at 1.3320, above the 1.3290 resistance and above the intraday swing high, giving you a 40 pip cushion. Target 1 is 1.3156, which is the immediate daily support, delivering a risk reward of about 1 to 2.5. Target 2 is extended at 1.3107, support 2, pulling a 1 to 4.3 R if you manage it. The whole setup is void if we get a daily close above 1.3375, because that would breach the moving average dome. So you're risking small for a high probability ride into support. Here's the on-screen graphic for this sniper plan. Display it now. The sniper, conservative, entry, 1.3280, 1H close below 1.3241, stop loss, 1.3320 take profit 1, 1.3156 take profit 2, 1.3107 risk, reward, 1:2.5 or 1:4.3 are invalidation. Void if daily close above 1.3375. That's your plan 1. Clean, strict, institutional grade. Moving to strategy 2, the active trader, the standard approach for those who want to catch momentum. As it breaks, this one does not wait for a pullback, it jumps on the breakdown. Entry trigger, sell on a 15-minute close below 1.3220. That level is just under the current pivot and marks a loss of intraday structure. Stop loss goes at 1.3260, above the immediate resistance cluster and the pivot, so 40 pips risk. First target is again 1.3156, the daily support, for a 1 to 1.5 quick scalp. But the real meat is target 2 at 1.3022, the monthly S3 and the ultimate liquidity void. Once target 1 is hit, move your stop to entry and let the runner ride into 1.3022. That's how you capture the cascade. If price hesitates at 1.3156 for more than an hour, cut half and hold the rest. This is the momentum play that capitalizes on the strong daily trend. Here's the on-screen graphic for the active trader plan. The active trader, standard, entry, 1.3220, 15M close below, stop loss, 1.3260 take profit 1, 1.3156 take profit 2, 1.3022 risk, reward, 1:1.5 or 1:4.9 are invalidation. Void if 1H close back above 1.3290. Type your pound sterling to US dollar range for tomorrow in the comments right now. Give me a high and a low. I want to see who's actually planning their trades instead of guessing. I read every single one and I'll highlight the most accurate range in the next video. Now, strategy 3, the aggressor, high risk, counter trend, only for those who can lose small and manage risk like a hawk. This is fading the collapse if we spike down to 1.3022 and the market overreacts. Entry trigger, buy limit at 1.3035 with a hard stop loss at 1.2995, just 40 pips below. This is a counter-trend scalp into a relief bounce. Target 1 is a rapid 1.3156, the former support turned resistance, giving you a 1 to 3 payoff. No second target here. You take the quick 120 pips and walk away. The setup is void if the 4-hour candle closes below 1.3000, because that would signal a full-blown crash, not a fade. This is not for the faint-hearted. You are catching a falling knife with a precise glove. Only execute if the volume spike confirms capitulation, not distribution. On-screen graphic for the aggressor now. The aggressor, high risk, entry, 1.3035, limit order, stop loss, 1.2995 take profit 1, 1.3156 take profit 2, NA risk or reward, 1:3.0 are invalidation. Void if 4H candle closes below 1.3000. That's your 3-play card. Every setup is built on levels that have held before, and each stop is placed where the structure breaks. No guesswork, risk management pulse. And I'll be fast because this is the non-negotiable stuff that keeps you alive. Never risk more than 1 to 2% per trade on any of these plays. Do not hold through high-impact UK political headlines or surprise bow speakers. Those can gap you out. Stops are non-negotiable. A 40-pip stop on cable with current ATR of 85 pips is reasonable, but never widen a hoping. This is how you survive to trade the next big move. Let's wrap and lock in your focus for the next session. The single most critical level remains 1.3156. A daily close below. That opens the trapdoor to 1.3022 and accelerates the trend. Tomorrow, I'm watching the UK gilt auction and any fresh political statements. Those are the wildcards that could either deliver the collapse or spark a short squeeze into 1.3424. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen and I'll see you over there. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one before the market tries to trap you again.